MSCI announced last week it will add 6 securities to its MSCI China A index and delete 3 as a part of a quarterly index review. Focus Media Information Technology, Giant Network Group, and First Capital Securities are the 3 largest additions. The 3 deleted stocks have recently suspended trading, and MSCI requires stocks included in its indexes to stay active for at least 80% of trading days each year. The index provider is proposing even tougher rules over prolonged suspension for China A shares, excluding A share stocks that have suspended trading for over 50 days within a 12-month period. The deleted stocks will not be considered for relisting for at least 1 year. Experts say that the rule is being imposed because of frequent voluntary trade halted companies.
The
rule for trade suspension was already in existence when MSCI announced the A-share inclusion, but the difference now is the 1-year ban on re-entry. It hasn't set that ban up in other markets, and that can be interpreted as a warning to China's A-shares, which have often chosen to suspend trading. Now the MSCI wants those firms to think more carefully about voluntary trade suspensions.
MSCI changes and updates stocks included in its indexes quarterly based on the capitalization of each stock, as well as other factors. And investors following the China A shares have been watching carefully whether Chinese public companies can live up to international standards.
One of the things that have been quite visible is their focus on ESG. So that's environmental, social, and governance aspects of companies, publicly listed companies. In fact, we expect there to be many companies that may not necessarily be up to the same set of requirements and best practices that we see from global markets because they haven't been around for as long. But overall, that's actually quite a good development for China and for China's markets because with those further requirements, it's going to make the companies increase their reporting, increase their corporate governance, increase their quality of operation.
There are not expected to be further changes to the A shares listed by MSCI in the near future. Only 5% of China A shares are to be officially included next June, taking up about 1.3% of the entire MSCI emerging markets indexes. Experts say it could take a decade for all China A shares to be included. Xu Xingchen, ICS for CGTN, Shanghai.